Hello, this is Victor Santana at StockHunters.com for Thursday, September 1st. Here we are, the 1st of September already. Let's take a look at what the markets have done for today real quick. And here we're looking at the U.S. total market. ETF symbol TMW. We're looking at the daily chart going back 3 months here. We've got our 100-day moving average, 50-day moving average, our 8-day moving average, and our two indicators here are RSI and the MACD configured specially for us here. So we were in the overbought zone here. We did get that pullback, and MACD still above here with the green bars, which is a good sign here. So we may be getting just a short little pullback, or maybe a bounce higher. We are still anticipating a target area around this area near the 50-day moving average for the market. So we'll see if we get that. Okay, so here we go, and as you can see, we got a down day, but we're still over the 8-day moving average. So we're still on the leaning toward the upside for the short trend here for the short time. So let's go and look at each of the individual indices, starting with the Dow 30. And as you can see, got that pullback. Now, one thing on this one here I noticed is you got the high here and the high here, and they're pretty close together as being the same. And normally we call that a tweezer formation. And when it shows up on the top of the price of the move, it usually means it's going to pull back down. And normally if you get this on the bottom end, it goes up. So in this case we have this here. So we got to keep an eye on this, and we are now pulling down here. So we may be hitting down all the way up to here to fill this little gap here, right down in this area. And they're pretty much on all of them are the same. So let's look at the S&P 500. See, we also got that tweezer formation, and so our target could be down here for the pullback, or all the way down here, and before heading up higher. Now, yesterday I did mention about the price touching the 50. It looked like it was a bad print on the charting software, and so now it's gone, just to clarify that. Now let's look at the NASDAQ. NASDAQ also having the tweezer formation. It has touched the 50-day moving average here, so it'll probably be getting a pullback down in this area here, right in this area zone. Okay, and let's look at the Russell's 2000, the small caps, and this one we did not get the tweezer formation as the others, but it is going down lower low, and so also we expect it down in this area, and this come down further here. Since we're above the 8-day moving average, if we get this momentum to start spiking up, then we'll consider entering some long positions here. But for now, it's best to not take any new trades going up. And then finally, let's look at the global markets. And as you can see, it had the pullback also. It just, a friend of mine would say, dink the top of the RSI line, the 70, not pulled back. So we'll see. Might not get a strong pullback, but we still have that gap to fill here. So we'll have to watch and see this as well. So let's go ahead and look at the our watch list, and go straight to our new idea, our recommendation. TZA, an inverse ETF leverage 3 times, representing the Russell's 2000, and we've got the setup here where it came down, and now we got the trigger here. So we're going to put an order just slightly above the high of today, and with an exit strategy of the low down here. So that would be a buy stop at 43.50 with a sell stop at 38.25. Note that this is kind of a little higher risk, 12.1%. So just keep that in mind. The target, we can have a target hitting up to around this area here, 47.40, or it can reach as high as 51.80. So that's our target here. Usually our ratios 1-to-1 or 1-to-2. I know a lot of people say go with a risk-reward ratio of 2 or 3 or best, but it takes longer to achieve them or to find trades, and so the 1-to-1 we pretty much find them pretty consistently, and they have pretty good trigger rates, so we'll stick with the 1-to-1 for now. Okay, now let's look at the trades that I'm in. I'm actually in EGO still, or actually I take that back. I sold this one right before the close, right up in this area, so I closed out this position, took a 5% gain from this entry here. So we had 1, 2, 3 on the 4th day. So this one will be taken out of the video, and then the next one that I have is RAH, and this one had the trigger recommendation right here, and we are slightly positive on this one here, so we're going to continue to hold this. And then the last one's TRH, and this one we had an entry price here, but since it gapped, it would get triggered in right in this area, and you're up here pretty good, so we'll keep that also. Alright, and then let's yesterday's new idea is LFC, and as you could see that it did not trigger us in, and it fell down lower. Now so what we're going to do is we're going to grab this here and move this to right above today's price. So just put it right in there, right there, and if it gets a little bounce, we get triggered in, and it could continue up, or it might come down. We still keep our sell stop down in this area at 35.86, so we're actually reducing our risk from 6.4% to less. So but we'll keep an eye on this. And then SCO, this one also we've had it come in our watch list here to get in up here. It didn't trigger in, so it pulled yesterday, went down here, so now here we do got a little doji here, so we're going to grab this little entry signal here, and oh, deleted it. Let me add that in there, and I'm going to just put it here on the side, like real quick, like so, and just grab it and then move that right over here. So here we are. So we're actually reducing our risk of the 10%, 10.4 to even less. So we'll watch this if it triggers us in on that. And then we have SDS, a recommendation yesterday, and as you can see that it did pull up and triggered us in, so we're in play on this one here. And I already talked about this one. Great. Alright, well that's pretty much it. Kind of a short video. We've taken some profits and have a few small positions, both going long and short. So this is what the market tells us, and that's how we're going to play it. Until next time, have a great day, and see you soon.